Hello traders from the inner circle, and welcome to a new video over here where we're going to look on the price action from this week plus the trade recap of today's trade. Yeah, I'm back happy, and this is the first point of this video. It's mindset. Super important, guys, because I started today to take excuses, to say it's a difficult day, difficult week, EuroUSD is not doing this what I wanted to do it, and stuff like that. But at the end, it's just my fault because I've been analyzing EuroUSD wrong. Monday was great, we took a nice trade. That 115R trade, yes, was great. But then on Tuesday was not really easy anymore, so I tried to go short, tried to go long. I took some losses, I took some small wins, but at the end it was not a day like I wanted to have it. And the problem was just because I've been analyzing everything wrong. And whenever you have a day like that, guys, whenever you're just feeling like, okay, nothing what I'm doing is working out, never try to say the market is bad or stuff like that. Of course, the market can be sometimes difficult. I'm not saying that the market is always very nice to analyze. No. But what I'm trying to say here is, guys, that it is just you or me doing here something wrong because we just are blind sometimes. Sometimes we just do not see what we're doing wrong. And then we're just looking at the charts and we just say, oh, okay, why did that thing go wrong? And this is why it's always important to do these price action recaps and also trade recaps. Trade recaps are good to understand, okay, what did I do right? Sometimes you just have luck, sometimes you just have luck and you're taking a huge trade and without really knowing what confirmations really played out that led to such a good trade. And the most important part is to understand your loser trades and also the missed ones, because by understanding the missed ones, this one will bring you definitely further, because you will understand, okay, that was a pretty nice trade which I completely lost because I didn't see that. Okay, and here a quick tip from me to you is, whenever I have a day like it was for me today, so for me it was not really good at the beginning, you can take two options. Option number one, you take a break. Okay, you go outside, you go for a walk, something like that, take a breath, and then you starting to go back to your charts and you are trying to understand what went wrong and what the situation is really about. And you can also, of course, use decreased lot sizes, decreased risk. Don't use just 1% for a trade, for instance, so just use 0.5, okay, if you really don't feel comfortable at that day, or you just skip that day. That's also okay. Just skip that day, just take a break, or skip the whole week if the whole week is not really yours. Sometimes it's just part of this business that's just not working out. And the thing is here, in trading, you're not going to be paid for the hours that you're spending behind the screen. No, that will be just your experience which you're going to gain. But here you're going to be paid for the right decisions. So you need to make right decisions so that you can make money. Otherwise, you will not get money. Nobody will give you right now $1,000 because you spend it right now 1 hour behind the screen. No. But you will get $1,000 if you're going to get a nice trade, or 10,000 or 100,000, depending on what account size you have. So this is the thing, guys. And therefore, I always recommend you to spend as much hours as you can behind the screen, but these hours should be focused, okay? Don't just stay here behind the screen, hanging out, looking at the charts, and just say, okay, I'm looking at the charts because Dara said to me I need to spend so much hours that I can. No, the hours need to be very focused, otherwise they do not make sense, okay? So that one thing just up front, very important for you guys to understand this kind of thing, because at the end, the most mistakes which we're doing here in the channels, every single one, including also me, is just mindset. It's just because we just are blind sometimes. We don't recognize these kind of things. So it's our personal problems that we're bringing here into the charts, but this should not be the issue. You should be always focused, understanding what you're doing about. And also a very good tip is, if you are not sure about things, when better do not take it, instead of losing money, don't take it. And also, if you have a bad day, just do a little bit of back testing, guys. This will help you to improve so much, and also building confidence. This is incredible. So I'm doing this almost every day. I'm backtesting, guys, because I love backtesting, and this is how I get my routine better. This is how I can recognize the different situation much better. That's my secret at the end. Backtesting, still backtesting. Okay, then I would say we're going to have a look on the price action from this week, and we're going to understand what kind of trade setups we missed throughout the week. So I'm starting here with the minute 15 time frames. I'm not going to go right now over the whole time frames. I'm going to just give you right now the detailed understanding what the price did over there and how we could look here for some potential setups. For everybody who's new, please check out the previous video, because you need to understand the overall context. And the overall context is that we are here in a 4-hour demand zone. So if you look over there to the very left, you got here your 4-hour demand zone where the price is pushing from, and you got a minute 15 refined one. So I'm not going to map this out as it will take us right now too much time. But the idea is that the price tapped into a minute 15 refined zone within a 4-hour demand zone. And this is why here long was definitely the go. And yeah, you can see that from there, the price has broken successfully structure. And the real confirmation for that break of structure was here at the moment when the candle closed above the new created wick. But I will still let that BOS over there. So very important is now this is our demand zone. So the idea is typically that we would like to see price coming lower to tap into this demand zone, and that we will see from here the price pushing up higher. Now, the thing is, what we can see here as well is that price took liquidity from here. So basically, you could view the whole thing here as a demand area. This is in this case the refined one. And if you go back to the lower time frames, you can see that you can find here, identify here a new demand zone. So you can use in this case both ones. So when the price will return to come back lower, you can use simply both demand zones for potential entry. And here in this case, you can refine it like this. But in general, the whole sell pressure over there is a minute 15 demand, or on a 5-minute a demand range. Okay, let's continue with the price action, see what the price is giving us. So you can see here successfully price has broken structure. It's not important for us. Yes, you could look right now for some short opportunities. It's always a possibility to go short. Just keep in mind that it could be more risky. Okay, now in this case, I'm more interested in a long, because everything is tending to be here bullish. And yeah, let's see what the price will do. Now here successfully price tapped into our demand zone, but we still need to wait, as we would like to see some price action confirmation. So we would like to see a charge, So in this case, here price has broken this valid charge. So our entry is definitely here. This is our demand zone, and this is where you can expect price to give you an entry if it will return to it. Now, as you can see, price is currently just flying away, and yeah, doesn't return. So just using right now this kind of a zone, which we'll see flipped, and it just come back up higher. So the long right now is at that moment not active, so we just need to wait. Now here it's important, when the price will return to it, it will be risky. It will be risky if price will even use this demand zone anymore. So we just need to wait here, of course, for some additional confirmation that the price will give us here some liquidity, So this is how I'm combining my price action confirmation with my charge, So always I would like to see both scenarios. Plus, what's also possible is that price would just tap in lower, Now, let's move on what the price is doing. Just consolidating a little bit, kind of a range right now. And yeah, this kind of thing reminds me definitely in the daily time frame on the Euro USD on the earlier times, if somebody knows that what I mean. Yeah, so moving, and we're just waiting for price to come lower. As you can see, it just came lower and lower and about to come to our entry. Now, you can decide by yourself right now how you're going to view this kind of thing, because you are definitely in a bullish range right now from the mid 15 time frame. If we come back, you can see, yes, this is our range right now. And you got here this one, and you can just expect price to be bullish. Of course it could go lower. Let's see, this is our premium and discount, so definitely we would like to be in the premium zone, not in the discount. So we would like to see price going lower. Oh, sorry, discount. It's discount. The lower part is always discount. Premium is above. Okay, yeah, perfectly. Price now tapped into it, and we need to understand what the price is doing here at this point. What it is doing. It's tapping into it, and it gave us here, before tapping into it, here's some liquidity. So potentially you could have been just placing here your buy limit and getting into this trade. This would be a risk type of entry with the confirmation that the price has given you some liquidity. So this is your personal decision how you're going to act on that. Me personally, yes, I like this type of entries very, very much, and I use them very, very often. So I use them always. So very often I use them. Okay, so that would be, for instance, your first buy limit. Let's see what the price is doing. Going up higher and lower. So look at this. This could be the risk kind of part of your risk type of entries when the price is doing this kind of thing. It could just go lower, but still respect our demand zone. So you could wait right now also here for a potential charge, always looking for a potential charge. So in this case, you can see it's a big range, price dropped. So not really interesting for us right over there to look for any charge confirmation. So we just need to wait also over there what the price is doing, and boom, it just broke structure to the upside. So if I'm switching right now to the minute 5 time frame, I can see very clearly, yes, the price has broken here some structure, and this is changing right now everything, guys. Okay, because of that break of structure, now I don't really expect price to come lower, as this is already mitigated. The minute 15 is at that time already mitigated. So you can see with a minute 15 it came down, and even on the minute 15 it just broke structure. So I don't really expect at that point that price will come lower to mitigate anything, as I view this kind of thing here as a mitigation, and this is a new demand zone on the minute 15 as well, and this is right now also mitigated. So what I can expect right now, of course, is this kind of thing, a mitigation of this part. So I'm going to the minute 15 to understand where this mitigation could occur. And I can spot here the minute 5 demand up there. Okay, this minute 5 demand or this minute 5. But this minute 5 is already mitigated, So this is already mitigated. So I would not really look right now here for a 1 minute POY to see price coming here lower. And as you can see, even if you look down here, you can see everything is here mitigated, step-by-step mitigation already occurred. So nothing interesting. So the whole thing here below is just invalid for me. So I'm just looking when price will come up there, come down lower here. I'm looking there for a potential buying opportunity, and you can look also over there for a nice charge or anything like that, because this 5 minute is not mitigated. So I can refine this kind of thing also to the 1 minute. 1 minute is this one, which is already mitigated, but the whole range is not mitigated. So interesting would be right now here definitely to see if price will give us here some charge, Now here valid BOS, that's super powerful, that we switch right now from bearish to bullish. So let's see what price would just gave us right now when we are going to tap over there. Okay, So price starts to come lower into this area. Okay, and it tapped into the mitigated zone. Okay, so this one is right now just invalid. Let me just remove this. Let's see how it will play out. Okay, going lower. Let's see if it will give us right now here a church. Potentially, we will have here a church. Church down, church up. Okay, and now I see what I'm doing wrong. We are at 2 o'clock, guys. Okay, so we're at 2 o'clock. Not really relevant for us, this setup, because it's 2 o'clock. I would not trade that, but let's see what it's doing. So just for those who are trading. Yes, here potentially you get your entry, guys. Okay, it's your entry to get here. So this is mitigated. You got your valid charge. You got your demand zone there, and it's valid, guys. So you can just go here to go long. Okay, but me personally, this one I would not trade because it's 2 in the morning. I'm not awake at that time. I'm sleeping like a baby. But yeah, it works. So this is here the proof also for everybody who is in Asia or is awake during the time because he don't like sunny days. Then he can trade this, you know. So it really works on every single time zone. But this is definitely a pretty nice example right now to show you how charge works and how you're clarifying your POY, okay, by just understanding what kind of demand ranges are in this case mitigated or not. Okay, so always think in that range as well, because a range is for us important to see if this should be tapped, you know, if it should be mitigated. So you don't need to have always a 50% mitigation, you know, it's not necessary. But like in this scenario, look at this. This is our whole demand range. Price just tapped into here. It's okay. But I'm not trading that because I don't have here any price action confirmation that I should trade that. So I'm just waiting and I see, oh, okay, price is already breaking structure, coming back down, giving me a charge. Massive reaction to the upside, coming back down to my demand zone, and boom, I'm long. And it also looks like a pretty nice Wyckoff accumulation. Okay, that was your spring and go. Perfect. This is really perfect example. Let's just continue. So we can see here price is moving BOS from BOS, and just to clarify right now the structural things. So you can see here this is for me a high, a low in this case. Oops. And this one as well. And this is the most tricky part, you know. If you understand how structure is really developed, then it is for you super easy to understand what the price is doing here. So also here, look at this. This is how I would use this one. Here, you know. This is the range where price is moving right now. From here, it's moving right there. Okay, and you know the theory, what we've learned. This price can do whatever he wants during this whole range, and at some point it will return, and it is bullish because it has broken the previous one here, this previous structure. So let's move on. Let's switch to the minute 15 and let's see what price will do when we are awake. You know, this is more interesting for me. So also me, I don't like, you know, I don't like to trade Asia because I'm not there, you know. So I cannot manage my trades. I cannot watch for price action confirmations, just because I have noticed that some of you are sharing IDs at 6 o'clock, you know, at night. I'm not looking at 6 o'clock anymore at the trade at the charts because I'm not going to manage it over the night or stuff like that. I'm not interested. The volume is so low sometimes, and I don't like that. I simply don't like that. It doesn't make sense for me. But probably for some of you, it will make sense. So why not trading it like that? You know, of course, very easy possible. Okay, so let's continue. Let's understand where price action is going, what it is doing, and where it is. So now we're still in this bullish range, and expectations, of course, price should go up higher. Let's see if we have something on the minute 15 interesting. At 7 o'clock, we're awake. What I can see here is this demand zone over here, or this whole demand range. Okay, so this is something which we would like to see getting mitigated. So at least the price will tap into it. And as you can see, price is here successfully now breaking the structure. And we can see here a ton of liquidity. So by the way, this is the trade that we took on Monday, right? 31 was Monday. Hopefully I'm saying it right now. Yes, that was Monday. So here's where the week really started. That was a trade from potentially Friday. Yeah, so price has broken structure, and my problem which I had on Monday, I was looking here for price to come lower, from that supply zone. Now what I didn't realize was that this kind of thing was already mitigated from the minute 15 time frame, so there was no need the price will come all the way lower. Of course it's possible, but no need. We need to go with the probabilities, and in this case everything is bullish, so why not going bullish? And this is where I recognized afterwards. So price has created here a ton of liquidity. Okay, and if you have liquidity, you will like to see price grabbing the liquidity, and afterwards what? Going long, of course. So now let's see, price is moving and moving and moving and moving, and we're expecting the price to come lower. Coming all the way back up, and that would have been, for instance, here a possibility, but not really fitting my rules. Okay, yes, it was a good one. Look at this, because price had here a supply zone, price tapped into the supply zone, and price gave us here a magnificent or very nice charge, So yes, it's a possibility. Not always the best, because price didn't tap here in a minute 1 refined zone, I guess. Or am I wrong about it? So this will be my M1 refined supply zone, but I guess price didn't tap into it. Not really, but it tapped in the minute 15 supply zone, which is also good, because you can see price has reacted from it pretty strong. It gave us a 1 minute charge, and price then simply just returned to it. And yes, why not? It's a possibility. I didn't took it. For me, it was a little bit difficult to figure that out. What I wanted to see is definitely price is hitting a refined area, because this is where you get a higher probability, Here you have your liquidity. Here perfectly equal highs. Price went up higher to grab these, and yeah, very good. Even this can be used as a source of liquidity, and yeah, price reacted from it pretty strong, went all the way to the downside. But now let's come back to our ID. Our ID is, this is a minute 15 range. So if you go on the minute 15 time frame, everything else is mitigated. So this one, like we already said, this is mitigated. This one is not mitigated. It's a fresh level with a ton of liquidity, and I'm just going to use this one because with this line I'm covering up the whole liquidity which is there located, and I'm going back to more refined areas where is going to be the minute 5. So I'm going to use this one, and I'm going to use this one, and I'm waiting, of course, for a pretty nice charge so that I can clarify, that I can confirm my entry. Now let's go back to the 1 minute to see what the 1 minute is offering us. And 1 minute could be sometimes tricky. Okay, so this is a fresh unmitigated 1 minute demand zone. This one is kind of a range, not the best, to be honest. And this one even has liquidity in it. Could have been also a good one, But if you look on a 5 minute, you cannot see that one. This one cannot really be seen. It's just a wick. Yeah. Can be used or not. It's a little bit difficult. So for me, it's not the best zone. I would not really use this one. I'm more for the lower one or for the upper one. So let's just see what price is doing. And price is moving down, and look at this, it's just going through it, you know, so no confirmation, nothing, not even a reaction. So of course this is invalid. Now we are at the low one, and this is going to be interesting for us. We need to see how is price reacting over there, and we can see and identify here the first potential touch, you know. So you can see price has stopped before dropping down, you know, and has given us here this touch down. Now what we would like to see is a touch up here, so price is going to wick above it, and we're waiting, and boom, price is giving us perfectly. So what I'm doing, refining everything, coming back. This is not my demand zone anymore because this demand is already mitigated. What I would like to see now is price to come lower to tap into my new refined demand area right over there, and to see how it will react. And as you can see, price perfectly tapped into it. So this is my zone. So last sell candle to buy, always that one. I would not suggest you to use it the whole area, okay? No, don't do this. It's just this one. This is the relevant one. And what you can see, yeah, price has broken right now successfully here this structure as well. And of course you have here a new created demand zone. Price tapping into this one as well and going bullish. So 2 entry possibilities from there, easy possible. And go, you go bullish. And that was our setup. Just the problem was we closed it way too early. If we would have been holding this one, guys, man, that would have been a crazy setup. But yeah, this is part of this business. So sometimes you fail, sometimes you don't fail, and it's okay. Now let's move on. You can see here, nice break of structure again. Price has broken this one, closing above BOS, and we need to identify the next potential demand zone, which is this one. And we're just waiting, you know, we're just waiting for price to come lower, and boom, it's continued to move up higher and creating new zones. And this is where price is in a strong trend, you know. So here, this is the range. And you can expect price to come here to test this and to go bullish afterwards. As your bullish range is this one, you know. This is your bullish range. Now, let's go back here to the minute 5 because I can see price is tapping into it. Let's see if we can catch something. And if you look here, it's super ugly, you know. What zone are you going to use here? Kind of difficult to use that one because my refined zone will be definite, at least this one on the minute 5. So let's see if it come back here to give us a price action. No, it's just moving up higher. Minute 15. Again, look at this, closed above it, you know. So everything is bullish. We got a new range. Minute 5. And you can see here a demand zone, for instance. This is a demand zone. This one is already mitigated. Let's go to the minute 1. Yeah. For instance, this is really difficult to map out, to really get into this trade. You can see this is not mitigated. This is actually really perfect liquidity for this potential long setup. And yeah, you could have been gone here bullish. So not really my point of view, you know. So it's really kind of difficult to really understand this. So it's very quickly, but it's with the order flow, you know. It's within the minute 15 demand zone. It's on the minute 5. The only minute 5 demand, yes, that's right. It's really the only minute 5 possibility because this is already mitigated. Yes, it could mitigate it lower, of course, but this is nothing which we should expect. Yes, on the minute 1, you can spot this one, you can spot this one, and this one. So you got 3 zones to go. Let's see if we come lower. No, look at this. It's just flying. You know, the momentum is just kicking in. Yes, definitely also pretty crazy setup if you take it. What you can see here in addition, which is super nice, is to understand that price has taken this previous liquidity here as well. So giving people the belief that it's going to be bullish, but it's then going lower. So it's clearing both sides. So yes, definitely a pretty good setup right now. If I'm just looking at it right now one more time, yes, it looks like a very magnificent setup at the end. And yeah, this is how you should refine it. This is your demand zone. Yeah, man, why actually not? Really, it's really a beautiful setup at the end. So yeah, bullish, bullish, bullish again. You can see spot this range, and now this is going interesting. So this is mitigated. This is, yeah, potential demand as well. So it broke structure. Yes, why not? Coming into it and just taking it, you know. So this is, so I don't like these kind of demand zones because price didn't give anything. So this is already mitigated. This one failed, you know. It is, look at this. This is what speaks against you. So you got here a ton of liquidity, which speaks against you. So going here long is just stupid. And you know that you got this one, which is not fully, so this is not mitigated, you know. This one is mitigated. So this one is mitigated. Just delete this. This is also mitigated at this point. Kind of. So this is difficult to tell if this is mitigated or not. This could be a good question. This is what makes it sometimes difficult, you know, because on some broker probably it's mitigated, on this broker it's not mitigated fully, you know. So just, but I would view this as a mitigation, to be honest, because it's just so less. Okay, this one not, so this is mitigated. This one failed. Simply this failed, and look at this. Went lower from that zone as well. Here a quick reaction was definitely there. So yeah, and price then did not mitigate this, also not fully. So if you go here in the minute 5, you cannot see anything. Minute 1 as well, nothing. So here price just reacted from it, came back up. Yeah, going bullish. And now we come closer and closer to our setup from today. Okay, no, this is still yesterday. So this is very, very weird price action at that point. So here to identify something. So you got here again bullish, you know. So this is your range. This one is also mitigated. So this is how I'm always looking at the market. Here a ton of liquidity below. Can see this ton of liquidity. Price takes that liquidity and boom, right into the demand zone. Okay, so this is right now interesting because here we can look for a nice potential buying opportunity. And what you can see here is the minute 5 demand. Let's refine it to the 1 minute. And what we can see here is this one. Okay, but this is, from my point of view here, already mitigated. So this is not interesting. This is interesting because this zone is unmitigated. And what is also interesting is that you got here that extreme one. You know, this is also unmitigated demand zone. So the only two zones which I will like, so let me just check it one more time. This is the demand zone. This one, you know, perfect liquidity for this demand zone. This one is here already mitigated, not interesting. But this one could be also interesting. The problem which you have with this zone is just the price didn't took any liquidity. This one, yes, this one took a ton of liquidity, to be honest, because it was with the order flow. And look at this, it just took out this one. So it took out here this liquidity, which makes this demand zone super powerful, you know. I won't more be interested in this one. Everything above is not really relevant as they're not at the extreme or anything like that. This one's mitigated, and this is something where I think we're already below it. Yes. So this one, of course not. This is something too above. If I'm going here to the minute 5. It's, you know, it's this whole thing which is also mitigated, so not interesting. Okay, so this is kind of my order flow that I'm using, always checking out minute 5, is it mitigated or not, go back to minute 1 and so on. Okay, so let's see what price will do if it will came down to our POI. Okay, good, look at this. So as I said, This one is not good, not interesting, but this one is interesting. So also here, what I would like to see is a judge, you know, so see price how it will react. Is it taking the liquidity properly or not? Are we going to see a nice price action confirmation, anything like that? Yes, we have liquidity, which speaks for us for a risk type of entry. Also possible, you know, to just use this, put your buy limit. Why not? I'm always a fan of entries like that. Everybody needs to decide it by themselves how they're going to use it. And perfectly. So you can see price is reacting from it, and looking right now to validate my charge. I'm doing it like this. You know, this is the charge. This is the where it stopped before dropping lower. This is the previous liquidity. This is the additional liquidity which is created. So charge. Then you got another charge right over there. Possibility if it will react from it. Boom. Charge. Where is your entry? Very easy, at the new created demand zone right over there. There I will place my buy limit, and let's go. Okay, going up higher. Okay. Looks like we are missing it. But still, you know, guys, there is a lot of liquidity, you know. So this is what just speaks for us, stuff like this. So it even broke structure at that moment, okay? So this charge is not only a charge anymore. This is, in this case, a real break of structure. It was validated right over there. And look at this. Price is really tapping in our demand zone, and boom. Okay, good. Valid. Valid, valid, valid. And it's moving. Now, what we can do is to follow again, like we're always doing it. For instance, our charge chain, you know, charge chain, break of structure chain, depending on what we have. Here looks like price did not broke it. So in this case, we just went above, taking this liquidity, and potentially we're going to drop lower to mitigate this demand zone. And this is right now tricky if it is mitigated or not. I would clarify this as a no mitigation, just because I see right now this kind of thing over there. Better would be right now if we change the minute 5. Yes, this is always good. You know, whenever you're not clear on the minute 1, go on the minute 5. Here we can see this is a whole demand range, and within that demand range, we expect price to mitigate something. And if I look at it, this makes sense, and this here makes also sense. So one of these twos I'm going to use, for instance, for a scaling one. This is just liquidity, you know, this is just a mitigated one. This is just at the beginning, could be also used, but this is perfect liquidity for the second one. Second one is already mitigated, so this kind of thing, this whole thing here is just liquidity at the end, you know. Yeah, it's difficult to clarify that one as well. So yeah, you can see a reaction from it. So definitely there was something in it, but price just went below it. Let's see. Okay, reacting from here, giving us here a potential charge again. Let me just map that out. So here charge, and there charge. I know, guys, a lot of lines, but this is the way I'm always analyzing. You know, I need to have everything into it to always remember, okay, this is my range. This is my range. Can be sometimes a little bit complicated, but yes. So charge there. Where should price come? Very easy. Right into this area, back again. Okay? Back into this area. You can refine it, of course, like this, or the whole range, depending on how risky you are. Okay, coming into it, let's see if it will respect it. Ooh, look at this, clear, on point. I did not map it up properly. Look at this. So on point, guys. Even took taking out this new liquidity, you know. So this is just crazy sometimes, you know. So it's always just everything based on liquidity. Boom, taking it and flying, you know, flying. Okay, so I'm always just looking for one or two charge change. You know, I'm not looking right now for another one. It doesn't make sense, you know, just to look another one. The other ones will be probably something very complicated, like this one. I mean, okay, you can go for them or for that or for even that one, or you can go. Okay, the range is already mitigated. This could be just too difficult sometimes, and it just doesn't make sense. Just follow this trade. It's enough. Go for it, and yeah. And that was yesterday, exactly. That was the trade from yesterday. Pretty nice, moving up higher. And yeah, today, now let's come to today's trade. Okay, so we are currently exactly there. So let me just delete everything because it's just way too much. So just for today, our shorts didn't play out. And what I made wrong today was simply that one because I didn't recognize my supply zone, to be honest. So this one was which I did not recognize. My idea was simply to go here short in the first place at this one because this for me was a premium supply zone. It took liquidity from there, and this is why I was so convinced that this one will work out properly. Then I was convinced of this one, liquidity here, and only 1 hour I refined here because I came up here. And that was my problem. I didn't recognize they're the equal highs because it is a little bit above, this one. So I took it like this. So that was my 1 minute supply, which had this liquidity and of course these. And that was my go for. This is why I was so convinced. Then I came back here to refine the supply zone. Minute 5. Minute 1. And I viewed it like that, taking liquidity, let's go short. That was stupid because this is the high. This is the peak high. It's moving like this, like this, like this. So obviously what we got here is just liquidity, and here relative equal highs as well. So this could be an easy liquidity for the whole market. So why not viewing it like that, going to the minute 15 over there and just viewing this kind of thing as a supply area, So better, of course, on the 4 hours because it's this here. And refining the whole thing to this. But it was already mitigated. So this is why I also thought, but okay, no, let's do it like this. At the end, price just spiked above this here, using this as an additional liquidity, and this is why it then dropped. And minute 15 was not fully mitigated, just a small part, but it's okay, it could be always okay like that. So the better idea of why it went really short at the end was more than likely this one. That price has broken 4 hour structure, and look at this, guys. This is what I didn't mention previously. It's also moving like this, demand chain on the 4 hours. Everything is going to be mitigated. Right now for my short, the idea also was let's go back to the 4 hour demand to mitigate the 4 hour range and to go bullish from there to take out this whole thing over there, because also this is at the end mitigated. The ranges are mitigated, but here this one was not mitigated. This is why it gave us right now a reaction from it, and we had a lot of liquidity for it. So obviously that was the whole idea because of the 4 hour demand and that additional liquidity of the equal highs. Me, I did not recognize it. You in the channel, sorry, I currently don't know your name, but thank you because you said it. There are equal highs. For me, yeah, it wasn't clear if they are equal highs. At the end, they worked out as liquidity, so good point over there. And yeah, let's just check out the 1 minute. And yeah, this is why I took in first place here an aggressive entry. So if you minimize it to the 1 minute, that was my entry. So I was an aggressive type, was my first one because I had the liquidity in my favor. So yes, why not aggressive? And then a second one to go short from this supply. And yeah, boom, it just took me out. just took me out, and then it started to drop down lower. And here was my mistake, because the first entry should have been here, because here is where the market really started to go lower, you know. So it gave us a charge, only 1 hour as well, 1 minute as well. Okay, it gave us the charge. What I mapped out was a 5-minute charge, which is also good, you know. So we even had a 5-minute charge because we went here below this one, also good, okay. But this is the more relevant one, and this is why I wanted to clarify this one here as well. So this is the 1-minute charge, price came back to it, and now you can go here to the seconds, you know, to identify here something. And at the end, where it went was just the 30-second supply zone. So here, whenever you see something like this, a big area, just go to the seconds to really understand what this kind of thing is about. You know, you will just miss on so many things if you just will not recognize the price like that. Okay, just try to minimize everything. Okay, so this was the missed entry. After price dropped like that, and I understood, oh yeah, there are 4 hours supply which is still in play. But yeah, minute 15 was mitigated, of course. That was the only thing which was against me. And then I thought about, okay, price has given me here a charge on the minute 5 as well. And this is what helped me out at the end to understand, okay, I still have a chance to go low, to go short. And then I was just mapping out the 5-minute range, you know, which I've sent it out immediately after I understood this scenario. And price came to the supply zone. Okay, now this, and what I wanted to see was also this, you know. That one was already fully mitigated, but still we had the chance, because you can just simply use this one as an additional liquidity for that setup. And yeah, at the end this was mitigated, okay, but here is where the price then came with this demand supply chain in it, then new one, and so on. And this is how you just can follow this kind of thing through, going to the downside. And look at this here, second opportunity, third opportunity, and so on. So you had here a ton of opportunities. First one, second one, third one, fourth one, fifth one. You know, it's just giving you really the charge, the BOS, everything that you would like to see. Then you come back here, next one. Here, not perfectly in this case, probably price will even come up higher to test it, but in the range it gave us already, you know. Always think in ranges as well, okay, because it mitigated here, came back all the way up there, so everything is fine. Okay, guys, so I know kind of a long video, especially we spoke a little bit of mindset kind of things at the beginning as well. So yeah, I'm going to give you here some chapters. Hopefully it makes for you more sense to understand everything. I know sometimes this kind of thing can be a little bit overcomplicated, but with a lot of experience, you know, with a lot of back testing, a lot of exercising it, you will definitely get it, and you will just do it like me, you know, automatically just understand, okay, range. Also me, I'm missing a ton of opportunities because sometimes it's just not clear, you know. If you're looking at afterwards, it may be more clearly, you know. Yeah, that's it. Especially right now, we've been just following the uptrend, you know, so it's clear if price is moving up, it's always easy to then re-understand. But if you just expect price to potentially drop, then it may not be that easy. But this is why here a quick tip, just try hedging, guys. Just trying to hedge, go long and short at the same time. Why not? You know, you will just thank yourself, your future self, because of doing that, because you will just miss, and you will not miss on any trade, and you will just take losses of -1R for the wrong position, and that's it. Okay, guys, so I would say thank you for watching, and we will see Dan in the chats.